Hey guys, welcome back. This is the Bitcoin market review for September 29th, 2022. And again, before we start to look at the price action and the trade setups that were in yesterday's price action, we're gonna look at the economic calendar and look if there were any high impact news events for US dollar yesterday, and there were not. There were just some medium impact news events for US dollar at 8:30. These two, final GDP and unemployment claims, and then two more medium impact news events at 9:30 a.m. and 1 p.m. Both were FOMC members speaks, and they can infuse liquidity, and I'd say we just look at the price and see if they did. So first, the 8:30 a.m. medium impact news events. Let's see, 8:30. I mean, yeah, it's a bigger candle. 8:30, and if we look at the lower time frame, we really can see that it did infuse liquidity. So let's go into 1 minute. Increase this a bit, and you can see the 8:30 candle. I mean, first it pushes down, then it pushes up once more, takes out this high, and then it breaks down. And I mean, here you could have been taken out of a trade because this candle went above this high again, and this is the 8:30 volatility, which was introduced by the medium impact news events right here. Next one at 9:30. Let's see. Actually, this didn't do too much. If you see, I mean, that's the 9:30 candle, which went above but didn't break this high. 19,322, 19,321. No. So it infused a little bit of liquidity, and then price went down again, but this didn't too much. So the 9:30 a.m. news event didn't do too much, and the 1 p.m. news event, let's see, 1 p.m. is here, pushed up and then continued down. So this did a little bit more than the 9:31, but still not too much. So these 8:30 news events did quite a lot to price. We saw the liquidity or the volatility they introduced, but 9:30 and 1 p.m. didn't do too much. Okay, and with that we can focus on the price action and what we had yesterday. I mean, first of all, we had this liquidity taken, like finally. Actually, let me put it out on this one. Like we have a fair value gap right here. Let me draw it out all the way to here. We had a fair value gap right here, and price came close here, came close here, came close once in the morning, and then finally took it out. So this liquidity down here was taken, and it pushed all the way into this fair value gap down here. So that was nice to see that it took the liquidity down there, and that was one of my targets for the day. And yeah, there's no setup on the 15-minute, so we're gonna jump right into the lower time frames. Actually, I'm gonna leave that up for now. So, and the first setup was in the morning, and it was this occasion where price came very close to the liquidity. And if you can see, price came close here, started to push up above this, leading to a market structure break, but then it broke down, breaking this low once more. And so, meaning we're very close to liquidity, so we can think, okay, price probably wants to push down lower. And so it did. So we draw out, we have a fair value gap. like right here. It's quite a low one. Actually, let me draw it out once more so we don't have the annotation on. Quite a low one. And actually, let me see if there is. I mean, on the 3 minute, it goes up a little bit. It goes up further, you know. So we could use the 3 minute chart here, but I want to use the 1 minute chart. Okay, then we can take this high right here to draw out the fib tool. We can see price pushed through the fair value gap into a discount, went like quite far up, but then eventually reversed, trickled down here, like went into a premium again, touched the fair value gap once, moves through the fair value gap once more into a discount. I mean, you can see how like the body of this candle, like just the wick goes into a discount, but the body of the candle stays in a premium, and then price breaks down and takes out this low. Draw it out like this, breaks down here, doesn't go to the liquidity, so it leaves that open for the move later, and then it starts to reverse again. I mean, that's just a quick setup here on the 1 minute, because like break down, it breaks below this low, so we expect lower prices, runs back up, runs quite far up here, and yeah, then goes back down. I mean, if you let me see, just want to have a box really. Let's go for the default one, because I just want to draw out a box. Because if you can see, price really stayed in a box up here. And if you draw that box out, price respects all this price action up here. So I would say this is more or less like it's an order block. Price respects this order block. Maybe it's a breaker, but I have to be honest, I have not looked at breakers yet. It's something ICT teaches as well. This could be one, but I'm not too sure, because like we have this downwards close candle right here, and then price goes up once more and then breaks down. And I think this candle could be a breaker. And yeah, price respects this candle, so don't quote me on that, but it could be a breaker. But okay, onwards to the next setup, which followed quite closely after. And it was, I mean, then we took out this low, and then we had a little bit of consolidation here, and then price started to extend upwards again. And actually click there. So we had a market structure breakdown here. You know, price started to push up. Oh, I mean, break this high, and this high, which were like equal highs, these two right here. Left open a fair value gap. Actually, I'm gonna remove this right now, just so you can see the fair value gap a little bit better. Fair value gap, price pushed into it, and then like pushed up further. And it respected like this downwards closed candle, which is the order block. So if we draw, I mean, the fib tool out, we do it like that, we can see price ran up, pushed down lower through the fair value gap into a discount, going into the order block a bit but not going fully through it, and then it pushes up higher, takes out this high and takes out this high and even this high right here, and then it reverses down once more, does its thing. We're gonna get to this price action here in a second, because there's another setup. But first I want to talk about the setup prior to this one. Like the price action right here, it's not too clean, but again, we have the low, then we have a high right here and right here, then it goes back down once more and then it breaks it. So we have a market structure break in here. This is a market structure break. And it leaves open a fair value gap, like this right here. And let's now draw it out, the fib tool. And actually let me draw out this order block right here, which price respects. So this is not the nicest setup, as it's quite, it's not the cleanest price action in here, but price pushes up, breaks this high, reverses back down, fills the fair value gap, goes into a discount, then it starts to push up into a premium, comes back down into the discount once more to touch this order block or go into the order block. But as you can see, the candles, or the bodies of these candles, respect the order block, and then it starts to push higher. So it's a perfectly valid setup. It's just not the cleanest, so it's not my favorite. But I thought I'd still show it to you, just so you know how a clustered setup like this can look, and it's still valid. It's just a little bit clustered, but it's still valid. As price pushed up, broke market structure, so we would look for longs, fills the fair value gap, goes into a discount, touches the order block but doesn't go through it, and the bodies of the candles respect the order block. That's what we want to see, and then it continues higher. So it's a valid setup, just not the cleanest. So now we come to the setup I pointed at earlier, and if you draw out the fib tool, actually I forgot something that I have to do, which is to denote that it has broken market structure. Actually it broke it down here, if you really think about it, like down, swing low, goes up, this is a swing high, goes down once more with a lower swing low, and then breaks this swing high and this swing high, leaving quite a big fair value gap. Like, that's a huge fair value gap. Goes back down to fill this fair value gap, goes into a discount. As you can see, the bodies of these candles respect the fair value gap, only the wicks go down through the fair value gap. It respects this order block right here. I'm not going to draw it out right now, but if you look at the cursor and the line on the cursor, you can see the bodies of the candles don't respect it perfectly, but they respect it more or less. This one just goes a little bit into this order block, so this order block is respected, and then price starts to push higher and attack this high, attack this high, attack this high and this high, and it goes all the way very close to the daily open on New York time. So smart money pushes price higher, pushes price back above the daily open, which it does a little bit later, but pushes it up to the daily open, and on the way up there is actually a setup which we can talk about. I mean, we are in an uptrend right here. Or actually we are an uptrend already here, and this is just a continuation. And we then have a setup from this low to this high. And we have a fair value gap right here. And as you can see, price pushes up, breaks this high, then comes back down to fill this fair value gap, touch this order block, and then it pushes higher once more to nearly touch the daily open, comes back down a bit, consolidates, and then eventually it pushes above the daily open, fills this imbalance right here, and then it reverses and starts to break down. And now we go to this breakdown, because this is where the next setup resides. And the first setup we're gonna look at in this breakdown is at 823 or around 820. And actually, let me show that to you on a high time frame first. So 830. I mean, we had the first, like we ran above the daily open, like filling this imbalance right here. So and then it broke down. And on this breakdown, actually, I need this as well. Because usually we would expect price to, for a trade setup, run into a discount. So on the 5 minute, you know, we can see price crash down below this low. So that being a market structure shift effectively. And then we would expect price to push above the 0.5 level into a discount for a trade setup. But it doesn't do it here. But on the lower time frame, we can see why it didn't do that. So it started to move down, leaving up close candles in here. And these up close candles are more like barriers to price. And as you can see, it really broke down here. And then it moves back up to this up close candle, but price doesn't go through it. It respects it, you know, it just goes up, touches it, goes down lower again, touches it again, and then eventually it really breaks down. We also have to consider, like, this was the 830 open, where price pushed down and then came back up again above this high. So yeah, always be aware of news events. But what I really want to do is drag the fib tool down here to anchor it to this high, because this up close candle acts, as I said, as a barrier for price. And we have a fair value gap right here. And now it makes more sense. Now it's a trade setup. Price pushes down, pushes back up, fills the fair value gap. Again, you can see the bodies of the candles don't push through the fair value gap, only the wicks come through. Price respects this up close candle and then breaks down below this line and took the liquidity. So if you look at that on a 5-minute chart, we can see liquidity is down here, price moved up, this was our trade setup, and then it broke down, took that liquidity, and now we're gonna stay on the 5-minute. That's very convenient right now, because on the 5-minute is where the next setup is. So price broke down, took out the liquidity, but if we look to the left, we can see it only pushed into this fair value gap, and there is still, actually, let's go to the 15-minute, you can see it a little bit better there. I touched on it before, and I talked about this fair value gap right here, which is below this low. So we took this liquidity, and now price is looking for more liquidity. And I mean, there's a low, so it takes that liquidity, but eventually wants to push for that, because there's a low with a fair value gap below it. Just a very nice target, so price wants to push down there. So we go to the 5-minute, because that is where we have our setup, and from the high where our recent setup had its entry down to this low, we can see price consolidate a bit and then pushed back up again, filling this fair value gap right here. So it goes into a discount, fills the fair value gap, and it respects the order block beautifully. This order block right here, as you can see, the bodies of the candles respect this order block very nicely, and then price starts to, I don't want to say crash down, but move down quite quickly and eventually touch this fair value gap right here. And that was the low of the day. So that's a very nice setup. That's probably the cleanest setup we've seen so far, with move down, move back up, fill a fair value gap, respect the order block beautifully, and then crash down. And that brings us to our next setup, which is on a 1 minute again. So, okay, let me draw that out. So, after pushing into this fair value gap, price reversed and started to reprice higher. And while it did that, it left behind another nice trade setup. I mean, as you can see, we have a high, a low, push through, takes out the high, forms a higher low, pushes through again. So we have a nice uptrend. And on this push up, price leaves behind a tiny fair value gap. Actually, let me see here. Can I draw that out? Come on, can I do it? I need to make it even bigger. Holy cow. Okay, so we have a fair value gap right here. And I mean, it's not the cleanest, you know, a lot of wicks, so the fair value gap is not that clean, but still. Price pushes up, comes back down, fills this fair value gap in a discount, respects this order block, like it doesn't come even close to it, just wicks into it, and then it pushes up once more, takes out this high once more, then it starts to consolidate a bit. So that's just a quick setup, just to show you, like, when price reprices higher, some like setups like this form quite often, where it gives you like multiple entries. And now, like in this price lag here, I'll go to the 5 minute now. So we were in here right now, and then like price pushes up, goes for all these highs right here, takes the liquidity, and then like it starts to move down. So that was during lunch. It pushes up during lunch, creates a high, and then it pushes down, and then eventually it goes for this high again. So the lunch high is taken, and this is something we see quite often, that the lunch low or lunch high are taken, and here it does both. Like it pushes, like it first pushes down during lunch, creates a low, pushes up, creates a highest high of the day, and then after lunch, price first takes out the low, the lunch low, and then eventually consolidates up, and in the evening takes out the lunch high, the daily high. And on this push up, we have a setup on the 3 minute. And I noticed I just already, I'm waffling quite long. I'm talking quite long, but we had a lot of setups in yesterday's price action. I mean, as you saw, we already had like 2, 4, 6, 7 setups. And now comes number 8, I guess. Yeah, number 8. And it's in this up move right here. And if you pull out, I mean, we moved down below the lunch low, and then price reversed. Here it took out this high, so from this point on, like with a market structure shift, so from this point on we're in uptrend, we would be looking for longs. This is not a good setup, but the next one is. So the next high to low, so like we take out this high, and then price pushes back down into a discount, into a fair value gap, or even better, there is a low with a fair value gap below where price pushes into, it is in a discount, and then it goes up once more to eventually go for this high, and then in the evening it goes for this high. So that's a nice continuation setup right here. I like those continuation setups when you already have a trend and then you have a high probability setup that it's gonna take a high, or it's gonna take this high again and it reprices higher. It's just very nice and very clean, and it's these are setups I really like because, as I said, they're quite high probability. And let me see. I don't think there is any more setups. No. Because like this right here could have been a setup. Like from this high to this low, fills these fair value gaps, respects the order blocks. But I don't think it takes out this high. 19,540, 19,539. I mean, eventually it takes it out, but it takes some time. I mean, I'm gonna draw it out for you guys, just so you can see that it would be a setup, but it's not the cleanest one as it takes like a long time in here. Jesus. Okay, so fair value gap in a discount, price pushes down, like respects the order blocks right here, pushes, like goes back up, doesn't take out this high, comes back down into the fair value gap, into a discount, respects this order block right here, like consolidates a bit, pushes down into the fair value gap in the discount once more, and then eventually it shoots off. So it would have been a valid trade. It's a valid trade setup, but as I said, it's not the cleanest, as it consolidates about in a premium and like around the discount quite a bit. Like it's in a discount, goes back to a premium, comes back to a discount, goes back to a premium, back to a discount, back to a premium, back to a discount, and then it shoots off. Still a valid setup, but takes quite a long time to form, and yeah, just not the nicest one, but still worth showing. And yeah, with that said, we have journaled all the setups for today. We looked at all the setups I found in yesterday's price action, or all the good setups in yesterday's price action. And yeah, I hope you guys are doing well. I hope you keep on studying, and I hope I see you guys again. Have a nice day. Bye.